Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Wednesday, May 3rd. This will be a technical analysis breakdown. So if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this would be a video for you. First, a couple quick clarifications. Number one, the price you see over there will be changing, and the candlestick you see right there will also be moving around. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, MINM, and a huge mover that we've had a lot of this lately, but this is the latest one down around the $2 mark, all the way up over 12, and now we'll pull back here. So you got to just throw out the question that, yes, it is pulling back, so it becomes a very valid question to wonder, all right, is this the beginning of the end? Is this going to be one of these pump and dumps? There's been a lot of pump and dumps over the past couple of days, people getting absolutely slaughtered in them. So yeah, some shorts have lost, but there's also been people going long at the top of these moves and getting, slaughtered too. So you got to keep in mind, it's not just the shorts that get destroyed on a pump and dump. Longs can, have the same fate, but so it is pulling back, sure. But to be fair, it's pulling back, yes, but what was happening before the pullback? Well, you had this big explosion up. So which now has allowed me to draw what is known as a bull flag pattern. Now, let me be very clear. Just because something's a bullish pattern does not mean for sure guaranteed the price is going to go up. But my point here is that, yeah, it's pulling back, but there is still a chance here to potentially get some sort of turnaround back in the upwards direction. So, but that's why risk management matters, because to be fair, maybe this is like I said, the start of the end where this thing just continues to completely collapse. But if it does decide to turn around, then you could have a nice, potential secondary move here. So if you like to play these sorts of situations where you get the big move up, then you get a bit of a pullback, then this is certainly one to keep an eye on. Next one, CJJD, which is a good solid pattern here. So as I draw this pattern, please realize that I'm not trying to impress you. I'm not trying to imply this is a special skill or anything. A lot of people have drawn these same exact lines because they've noticed the same exact pattern. And I say all that because when a lot of people are watching the same pattern, wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movement. So let's make this all one color to make it easier to see. So we have our resistance, we have our support, we have the big explosion right there. For you golfers out there, we'll put the golf hole down here. So this would be known as a bull pennant pattern. Again, are there guarantees? There are not. But is it valid? Is it plausible to think that if the price can come up to the top part of the pattern and get the break, that break in of itself could create additional buying pressure? That is certainly a plausible outcome. So if you like to play stocks down below $2, you like bull pennant patterns, keep an eye on it. Next one, IDEX, did this one yesterday and talked about this red line here being an area of resistance, but you can see the price got a very, very impressive break up through there during that opening 30 minutes of the day. So updates need to be done. Going to do a little house cleaning first, just get rid of that line there as it served its purpose. But the first key update comes about based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So moving forward now, 5 cents is that newest area of support in terms of levels of resistance. A couple different ways you could go about it. You could draw a resistance trend line down like that, or you could just draw the flat top resistance up there at 7 cents. Like I said, whatever you feel comfortable with, both of those would suffice. So if you're doing that one right there, then essentially what you're looking at is another bull pennant pattern. But if you're looking for that level up there at 7 cents, then that's just more of a classic kind of complete, curl back up and then looking for the break up through there. So like I said, where you draw that level of resistance, completely up to you, but I definitely say you have a couple of choices in that regard. But overall, another solid day for IDEX. Next one, SOFI, another absolute beatdown today, came down below both these levels of support, but is now once again forming an interesting pattern. So this pattern becomes that much more interesting because you have another day of just getting beat down. So yesterday, beat down, today, beat down, but the beat down, didn't last the entire day. It actually started to work itself back upwards, where the price actually started to now get a little bit of an upward slope to it. So again, I'll change that to green to represent more so the support dynamic of things. And then you have a very well-defined potential breakout point right there at, let's see, what is that? About $4.95. Now, I do realize for you bears out there, you're absolutely right. Basically, all I've drawn, that's terrible. We got to try that again. Basically, all I've drawn, there we go, is a bear pennant pattern. You're not wrong there. But the point here is that it becomes valid now to think that, okay, the thing, case in point, let's say this. Let's say the price was just dropping, and then I'm sitting here saying, hey, it's looking like this could be some sort of bottom. You'd have every right to call me completely crazy because Based on what? The price is still just dropping. But that's not the case here. The price has at least started to go sideways. Now, let me be very clear. Just because the price has gone sideways doesn't mean that it's the bottom. But does it become at least does it become at least a plausible thought that it could be some sort of indicator of being a bottom? Yeah, absolutely. So on that note there, keep an eye on this pattern here, and let's see if this is some sort of bottom, because you got to think when this thing does get some sort of bounce, it could very well get a good solid bounce. I'm not saying go back up to $6.50 or anything like that, but relative to what would be risked, you could have a nice little risk-reward scenario. Next one here, AMC, and first update that comes about is this level of support right here. When broken, they tend to act as resistance, and you can see that actually played out perfectly today. So supports tend to act as resistance. Price came down, broke below it right there. All the way down there, nice bounce up, and then surprise, surprise, wouldn't you know it, right where it got rejected from, right at that level before heading down here a little bit. The good news is that the price is still within striking distance of that level, so it's not going to need to move that far in order to be doing battle with 555 again. But nonetheless, 555 remains that initial area of resistance, and then after that, up there at 570 becomes that next level of resistance. If the price does roll back over, then two main levels of support stand out. The first level down here at $5.32. You can see the price did a good job of holding strong there, and that's right where it bounced from there. But if 532 is broken, I want to get too excited, especially if you're bearish, because not that far below that one is the pink line there, the very famous 200-period moving average, right now valued at 525. But yeah, today, relatively big pullback, but let me kind of add in a bit more context. From the bigger picture point of view, you can see that the price is still much higher than where it was previously. But nonetheless, like I said, a bit of a pullback and consolidation here, but we'll see if the price can make another go back up to those areas of resistance. Real quick, want to take a break and personally invite you to get signed up for this free live online class that I'm offering later on this week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then certainly get signed up for the free live class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've seen, then I definitely want you to get signed up for the free live class. Next one, PACW, one of these regional banks that all of a sudden got destroyed today after having hung up relatively well. But now it gets interesting because, it got, basically straight down for the early part of the session and then has now bounced up a little bit, which brings about a valid question. Okay, does this bounce have some genuine power? Is this kind of leading indicator of things? To be fair, it may not. So for those of you shorts out there, in my mind, a very interesting level right there around $6.25. If 625 fails, is it guaranteed to go down those lows? Of course not. No guarantees. But does it seem reasonable that that thing could potentially roll over and go back down there? And then who knows, potentially double bottom. Yeah, but from a short standpoint, that'd be a long fall before you'd have to worry about any sort of potential double bottom. So like I said, if you're more of a bearish person, then 625 is an interesting level from there. But if you do like to try to catch reversals, then a level that you got to think, many people have drawn is that trend line right there. So, reintroducing that talking point of self-fulfilling prophecies, got to think, like I said, a lot of people watching that level. So if this price were to turn around and go back up there and get up through it, then guaranteed, of course not. But, is it plausible to think that a break of that level could create that much more buying pressure? Absolutely. So a couple different choices there, but this one's been getting quite a bit of attention, and I don't see why it wouldn't get any more attention over the next couple of days as the banks seem to be staying in the news, but we'll see what happens. Next one, TIRX, and this is a very, very ugly looking chart, but for you longtime viewers, you know what I'm going to say next. There can be opportunity in the ugly, and the opportunity here that I could see potentially taking place is down here at this form of consolidation area at the $1.40 mark, which is also the value of that pink line right there, which 200-period moving average. So are there guarantees? Absolutely not. And I know I've said that many times, but I'm going to continue to say it because I want you to realize that none of this is being stated in hey, this is for sure going to happen, because that just doesn't exist. But from a risk-reward scenario, so if you're not disciplined, if you're not going to honor stop losses and all that, you should not be touching these sorts of, you shouldn't even be trading, but you definitely shouldn't be trading these scenarios, because if this thing comes down, it could very well just keep bleeding, and you don't want to sit there and hold the bag as it goes to oblivion. But is it rational? Is it reasonable to think that the price could come down here and maybe get some sort of bounce in the upwards direction? And yeah, absolutely. And let's say that the price, it's only a dead cat bounce. So the dead cat bounce, let's just say, goes up to that high. Relative to what's being risked, that would still be a very nice risk-reward scenario. And if you just get a full-blown reversal, then you could be looking at a grand slam trade. But again, relative to what's being risked, you could look at a very nice trade plan. But if you're not going to be disciplined, then all this kind of goes out the window, because you don't want to sit there and hold the bag, because this thing very well can continue to just go straight down. But if it can bleed a little bit more, get a little bit more ugly, then right around $1.40 is certainly an interesting level. Next one, NIO, and a very terrible day. Not necessarily because it was red, but just from a technical point of view, the price has broken down through what had been an important and significant level, and that was this green line right here, which going through the history of things, you can see up until today had done a fantastic job of holding strong whenever the price got around it. But opening part of the day, you can see just could not quite hold on to it. And when it did finally surrender, big move to the downside. So that's where our first update comes into play now. The 765 mark going to be the newest area of resistance if there is any sort of attempted bounce. So yes, right now in the very near term, a little bit of a bounce right here, but doesn't really mean much because there's a lot of tests that still need to be done. First test, of course, that level we just talked about, and then not that far away, you'll have the test of that 50-period moving average, the purple line right there. But overall, yeah, very rough just because, like I said, broke down through what had been a good solid level. And then when I do this, you can see that that is now putting the price down at levels that have not been seen for, we're talking months upon months. So as I zoom back in here, as far as levels of support, nothing complicated here. Literally just a question of, well, where did the bleeding finally stop today? And the bleeding finally stopped down there at essentially the 734 mark. So 734 going to be that main area of support for that reason and that reason alone. Next one, TSLA Tesla, and overall a rough day here after what started off as a nice opening 30 minutes, completely rolled back over. But some of the levels, and this will mean more to those you that have talked or that have watched past videos, this will mean more. But all the lines that I've drawn are completely still 100% relevant, and I would argue just that much more relevant. So the first level that was relevant was this level up there, that overarching level of resistance. You can see price got up here, false breakout, came back down, tried to get above it again and failed, came back down below this area of resistance, and you can see as soon as that level of resistance failed, price bounced back up, back down. You can see right here, tried again, back down it went. Now when it went back down, look right where it bounced. Essentially right at that green line. So I'll turn that into a quick plug. Get signed up for that free class. Are charts perfect? No, nothing's perfect, but are they a very worthwhile tool? Absolutely, and you're seeing that in a very, very real life example right here. So point here being is every line that I talked about yesterday still holds. So key near-term level of resistance right now going to be right up there at that 162.50 mark. Overarching level of resistance up there right around, let's call it 164.50. And then as far as a key level of support that you got to think so many more people are watching now is 158.75. I mean, look, check that out. Once, twice, 3 times now. So if the price were to come back down here and break through it, it's reasonable to think that that could be the floodgates that open up and cause that much more selling and panic just because people are noticing that this former level of support has now been broken. But like I said, overall, the levels that I talked about in yesterday's video still pertain here headed now into Wednesday. Next one, TQQQ, which is an ETF that measures the NASDAQ. So if you believe the NASDAQ market is going to rise, this one will also rise. It just allows you access at a much lower price point. And overall, rough day here, as I'm sure you're well aware with the NASDAQ. You can see the price came down here, broke through that trend line that I drawn yesterday, and then the floodgates really opened up, but once more, the power of charts. What a coincidence, right where the bleeding essentially stopped. Right there at that pink line, the very famous 200-period moving average. So moving forward, that 27.08 mark. Let's just call it 27. Going to be that key level to watch moving forward. As, in fact, let's just put in a line down there to represent that being a key level now. Just make it right at 27. There we go. So 27, 27.08, what do you want to call it? But like I said, broadly speaking, right there at that 200-period moving average in terms of levels of resistance. Going to go ahead and get rid of that level. Yes, you still have this level up here at, there we go, 28.50. But that's irrelevant right now because in the near term, the newest level has become that 50-period moving average, which you can see right there rejected the price and kind of right there rejected it. So like I said, near term, 27.75 will be that first key level of resistance. And then from an overarching standpoint, up there at 28.50. But yeah, brutal move here. There is a bit of a bounce, but is this just a dead cat bounce that's getting ready to roll over? Grab your popcorn and let's see how it all plays out on Wednesday. So that wraps up the top 10 list. Again, if you like what you saw here, then I want you to get signed up for the free live class. It'll be later this week, Thursday, May 4th at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, do 2 things for me. Hit that like button, leave a comment below. Those 2 things communicate to me that you enjoy. And as long as I know people are enjoying, I'll continue to put in the required time and effort to get this content out to you. So like I said, get signed up for the class, hit that like button, leave a comment down below. Everybody, thanks for watching. Take care.